Welcome back to U.S. Farm Report. Jim McCormick, as well as Sam Hudson, joining us again. All right, Jim, when you look at interest rates, the Fed this week saying that, the rate hikes will continue, but will be at a slower pace than we have seen in the past. So when you look at that rhetoric, did it give confidence to the market, or did it make the markets a little bit more nervous, considering we could continue to see some of these hikes?
Well, right now, if you look how the equity market reacted to it, I think overall you could argue it definitely gave the equity market some confidence. But I think if you're a producer out there, you've got to realize the cost of money is getting a lot more expensive today, Tyne, and that's going to change your balance sheet dramatically. I mean, you're used to free money. Now you're looking at farm loans somewhere around 7.5%, 8% to put that operating note into 2023. It's only going to get more expensive. The Fed raises rates, just not as fast as we thought. So it's something I think it will have kind of a negative impact on the balance sheets of producers. So it's something they really need to talk to their bankers about.
Yeah, and Jim, when you look at that and the cost of money right now heading into 2023, Sam, you're looking at locking in inputs, you're looking at higher costs with that across the board. So is there some things that a producer needs to be thinking about with their marketing plan in order to kind of have that be an insurance of sorts?
Yeah, in fact, it's a great lead into 2023 is the rate discussion, because there's a lot of farmers that are able to pay down debt, kind of get current on other liabilities at this point. But if you don't go out there, really the only way to prevent yourself from getting loans back out there at a higher interest rate here a year or 2, 3 years down the road is to go out there and make some forward sales. As you mentioned, many do have at least some of their inputs locked in. It's still always going to be somewhat of a moving target until we get to next summer and what we know we've put into the crop. But have a pretty good idea of where those inputs lie, and beans especially seen a dramatic increase in terms of the cost of production there. And unless you can write in 80 bushel an acre, $14 beans for next year don't look too shabby in terms of getting a marketing plan started.
Looking at some other news this week, EPA looking like, they're recommending a boost in biofuel blending volumes, also incorporating using biofuels possibly to charge electric vehicles. That would be something new in the RFS. But you look at renewable fuel standard in general, ethanol demand in general right now, Jim, do you think that continues to be a positive, or is 2023 maybe where we see that kind of tip a little bit?
Well, I think, Tyne, in general, it is positive. I think the biggest problem we got right now is it wasn't, they're not really pushing the really big increase in these mandates into 24 and 25. And I think that is going to be a little bit negative psychology-wise for the market in general near term. But in the long run, we're very optimistic, especially with this renewable diesel. I think it's very attractive in the fact that, when we got ethanol into the system, big oil is fighting us all the way through. That is the reality of it. They're all in on this renewable diesel. It's a drop in oil or, in energy component for the energy system. And I think in general, you got to be very optimistic of it. And I think that's a good sign, because in the long run, I think we are going to lose some of our export demand to the Brazilians. And I think this renewable diesel, the crush capacity increasing like we're projected over the next couple of years, will help offset that.
Sam, do you think that could alter anything when you look at some of the outlooks that USDA will put out in upcoming reports when it comes to feed and residual use?
It's possible. I don't think we're going to see any major tuning there just yet. I think this is kind of a outlay of what we're typical and used to seeing from EPA, and that is that they bumped some of these projections, which was well expected. As you mentioned, they come right in the side door with some of these EV credits and just robbing Peter to pay Paul. And unfortunately, the ethanol is the Peter of the energy sector, I think. And so what that looks like long term, short term, I think we got a good profitable market here on the spot market because of what fuels have done. Question is what is the longevity of that as we get into the back end of next year? If we have a good crop in the U.S., I think you're going to look at some more challenges for ethanol, again, just from the profitability standpoint. But I agree 100%, on the biodiesel side of things. I think there's plenty of room to grow there, and probably more growth potential on that side as a percentage than even on ethanol.
All right, Jim, it looks like crisis averted late in the week. It looks like Congress will step in with this rail strike. Bottom line, though, it's had a lot of people on edge. So are our transportation issues that we've been talking about, are we in the clear, or do you think there are still some caution signs when it comes to this impressive basis that we've had in spite of it all?
Well, I think you're going to have some problems. Like I said, I do think the rail industry is going to get cleared up. I don't think everyone's going to be happy about it, but Congress is definitely going to step in. There's just too much economic risk. The basis, it's going to be really interesting. I think the biggest problem we're going to see right now, Tyne, is we got to get some moisture in the upper Midwest where we can get these rivers flowing. The barges just aren't able to move at full capacity, and that is, driving up the cost of shipping, and that's going to help keep us a little bit uncompetitive on the international market. So we're going to see some, interesting moves in the basis here and there as the market tries to bid for grain or try to drop when they really don't need the grain due to a lack of competitive bids.
All right, Sam and Jim, thank you so much for joining us this weekend. We need to take a quick break, and then we'll be back with much more U.S. Farm Report this weekend.